UPSTART stock is trading at about $63, and is it a buy at this point? That's what I'm going to cover in this video. In doing so, I'll cover UPSTART's business model briefly, then I'll go over some financials, and finally I'll show you the valuation to show the upside. Let's get started with UPSTART's business model. UPSTART, together with its subsidiaries, operates a cloud-based artificial intelligence lending platform in the US, and they work with personal loans, automotive, refinance, home equity, small dollar loans, etc. And they connect the banks to the loan borrowers. In their opinion, traditional lending is broken because apparently 80% of Americans never defaulted on a loan. Yet, less than 50% get access to good loans. Rest of the 50% outright get rejected because currently we're using traditional methods like FICO score, which do not take into consideration a lot of parameters, right? And UPSTART is saying that they can use artificial intelligence to determine who will pay off the loan and who doesn't, right? And therefore they are saying that banks and credit unions can give out 101% more loans to the applicants and not have too many defaults. And they're also saying that when they analyze a lot of parameters of a particular loan borrower using AI, they can also give out a risk score with which the borrower, the loan borrower, can get less interest rates or less APR. So it's beneficial to both the banks as well as the loan borrowers, because loan borrowers will get less APR and the loan givers like the banks and credit unions will have less defaults and more loans. So it's a win-win-win situation for UPSTART, loan borrower, and banks and credit unions. So it looks like a great story. So now let's look at their numbers. As you can see on the screen, at $62 stock price, the market cap is $5.74 billion, and for the past 12 months they made about $600 million of revenue. So that's a price to sales of 10. We cannot judge this company by price to sales, but net income is negative 168 million, so they are nowhere near profitability. Let's look at their gross margins. They are in the order of 70% plus, and look at their operating margin, profit margin, and free cash flow margin. The operating and profit margin are negative because they're not yet profitable. They're also going through a crisis because of the high interest rates, and there's also a popular opinion that their AI model doesn't work for high interest rate environments. So they have to fix that. They are working on fixing that. So there is that uncertainty element as well, that how effective are their AI models, because at one point of time they said UPSTART originated loans are 75% less likely to have defaults, but they did that study during the pandemic where people were getting the stimulus checks. When people got the stimulus checks, they were paying off their loans very well. So that contradicted their study, but when the interest rates went up, they didn't find too much difference. So they're working on their model for it to suit to high interest rates, but again, in future, once the interest rates go down, their model is supposed to work. At least that's our assumption. Their model should work much better than the traditional methods, right? Otherwise, there is no business for UPSTART. Let's look at their revenue growth rate. As you can see on the screen, it's very cyclical. Sometimes it's negative, sometimes it's high negative, sometimes it's high positive, and sometimes it's negative. And look at their outlook. They're estimating $180 million of revenue for Q4 of 2024, and that's also close to 20% gain. So again, this company is very dependent on interest rates and the number of loans given out during a particular period of time. So we cannot take these numbers into context and give out a valuation, but I'll still try to give you a valuation with which you can make a decision. So let me move on to the valuation. Before I do that, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about UPSTART. Let's get started with the reasonable assumptions case, wherein I'm estimating 25% growth rate for the next 5 years. You can say that, how did you come up with this 25%? Because in the most recent quarter, they're saying 20% growth, and the quarter before, it was negative and the quarter before it was positive and then negative. So the reason why I put 25% is look at the 2029 revenue of close to $1.9 billion. Once the interest rates come down, and a lot of people will continue to apply for loans and get a better approval rate when the interest rates are down, right? Is $1.9 billion possible for Upstart? I would say yes. So that's the background for that 25%. Net profit margin, I'm assuming 22.5% because their gross margin is 70% and they are mostly software based. So 22.5% is reasonable. With that, they will make close to $400 million of net income in 2029. I'm assigning a multiple of 30, with which this company would be worth about $13 billion. Currently, they have close to 91 million outstanding shares. I'm estimating 5% dilution because they are nowhere near profitability. They're giving out stock-based compensation, and this 5% is based off their past dilution and stock-based compensation. So with that, 2029 stock price would be $109. Currently, they're at $62, right? So that's about 74% gain in 5 years, which is attractive. Let me look at the great execution case, wherein I'm estimating 30% growth, 27.5% net profit margin, and a 35 multiple, with which this company would be worth about $190. Based on the current price of $62, it's 201% gain, which is phenomenal. For my personal journey, as you all know, I look at the reasonable assumptions case where I at least need a double. And in case of Upstart, there is some risk involved, so I need more than a double. My target price for Upstart for 2029 using reasonable assumptions is $109. So I want it to be at about $50 range before I start a position in this company. Otherwise, I'm going to stay out. Let me know your thoughts in the comments. Thank you so much for watching.